Gary Wagner here just before 12:30 in Honolulu, 6:30 in New York. It is Tuesday, 22nd day of September, 2020, and this is the Daily Report for Gold and Silver. We had a mixed bag in the morning session where we saw gold trade lower and silver trade higher. However, the takeaway that I got and we'll look at during our technical studies is that we've got a key area of 1900 in gold and $24 in silver that we need to see held if we're not going to see more further downside. Let's take a look at current pricing though. Yesterday's double-digit drop in gold, taking prices actually to $18.85 intraday before recovering just above $1900. That slide is continuing today with gold futures. This base is the most active December contract, trading at $1904.30. That puts it down about $6.30. The key to today's trading was the intraday low. It touched on $1898.90 for a brief moment, but still remains above 1900. I believe that to be a critical area the gold must hold if we're not going to see more downside potential. However, silver did show some strength today, up about 12 cents with December futures trading at $24.51. It is still well below the 50-day moving average, which is currently fixed at $25.64, but we did see a slight uptick in the price today. When we look at the dollar index, which was really responsible for today's decline, you can see on this weekly chart that it's really had a strong week. And if we go back to these lows on September the 1st, the dollar has gained approximately 2.34%. It has definitely had an effect on both gold and silver pricing, putting strong headwinds to any uptick in each of those markets. Let's take a look at our technical studies. On a technical basis, I still believe that 1900 is a key and absolute area that gold needs to hold if we're not going to see more major chart damage. We certainly had chart damage yesterday as the market broke below the 50-day moving average for the first time since about June right here. And here it only traded there for a couple of days before moving back above that. We're now in the second day below that. This 1900 level, if it holds, our resistance area that we need to see gold break above is 1941.20. That's the 23% retracement, and it also aligns with the 50-day moving average, which is currently at 1942.60. If gold continues to drop and breaks below this key level, we would have a new target of approximately 1845. That would be the next level we could see gold move to if it continues to trade under pressure. Another model illustrates the fact that if we see continued pressure, we would look to this low that came in on August the 10th at approximately 1880, just below that, as a key level that we could see a bounce off of if we see a further decline. So those are the areas that we're looking at in terms of support and resistance. We are looking at a daily candlestick chart of December silver futures, and although it traded higher than the close yesterday, which is right here, it certainly didn't make much headway. It closed lower than it opened, so we're getting a red candle. It had a lower high and it had a higher low. In other words, an inside trading day. It also corresponds to an area or a price point where we could find potential support. It did break briefly below $24 before recovering. Therefore, I do see some similarities in gold and silver in terms of recent price action. Just as 1900 is a key psychological or key level, I believe that $24 per ounce has that same effect on silver. That's a critical level we want to see held. And as I said, if we see an uptick, 25.77 would be a target. We could find resistance here. If the market continues to trade lower, we do not find any real support until about 23.05. That is the 38% Fibonacci retracement level. For right now, my recommendation is to maintain our neutral stance in both gold and silver with no active future trades. We are still long Nugget, and Nugget did recover slightly today. Nugget actually gained approximately 0.8%, a little bit over 75 cents per share, and is currently at 88.99. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.